Welcome back to Bitcoin Season 2. Bitcoin Season 2 is about new characters and new faces on Bitcoin. Speaking of new faces, I've got Colin Harper, Blockspace Editor-in-Chief, tag teaming this conversation with me. Good morning, Colin. How you doing?
Good morning, Charlie. I'm doing fabulous. It's sunny out. We've got meat in the fridge. We've got vegetables in the garden. You got to just ground yourself. The
Some
world's
people
crazy,
some people
but
spend all day online on Twitter, and you seem like you've actually got the IRL part of your life rolling pretty well. So,
trying to.
yeah. So thanks for tuning into Blockspace, Bitcoin Season 2. Make sure to check out other Blockspace media content such as the Gwart Show, the Mining Pod. Colin's spinning up a lot of interesting Bitcoin stock and equities commentary. And make sure to hit our website, blockspace.media, sign up for the Mining Pod and the Blockspace newsletter. But today, we have a wonderful guest, Tyler Evans of UTXO Management. We're going to talk about Bitcoin Venture and Bitcoin Venture against the backdrop of Bitcoin Season 2. Disclosure, UTXO does have involvement with Blockspace Media, so we want to get that off our chest and out of the gate. But otherwise, without further ado, welcome Tyler to Bitcoin Season 2.
Hey guys, thanks for having me. And we only have involvement with Blockspace at UTXO because we're huge fans of Charlie and Colin and their team and the content they're putting out around all the innovation happening in Bitcoin. So glad to be here today.
Thanks. Yeah, glad to have you, Tyler. I've been following your work in the Bitcoin ecosystem for a long time. But before I get a little context on UTXO, I have to ask the question: does UTXO management manage your UTXOs?
They do, and not a lot of people get that name at first. It's really only now that we've kind of gotten into Bitcoin Season 2 and like people are actually talking about UTXOs and fee rates that the name has become relevant. But we actually chose that name 5 years ago when we were first starting our kind of asset management arm. Thinking about how we position an asset manager in the Bitcoin space, and managing UTXOs is the heart of it.
Okay, so yeah, so you started quite a while ago, which represents, I mean, a couple eras ago in Bitcoin and Bitcoin Venture. Just talk me through the formation of UTXO management, up until I would say the launch of Ordinals. I would say, talk me through UTXO management pre-ordinal theory, because I feel like that's an important inflection point.
Yeah, so UTXO has quite a history, although it's gotten even more fun in the last year as this whole space has heated up. But we started UTXO basically, by way of quick background. I'm one of the co-founders of BTC Inc. with David Bailey. Kind of cut my teeth also in the Bitcoin media space, which is a brutal one, but I got to work with some amazing people, including Colin at one point in time. And as you know, the Bitcoin Magazine, our conferences kind of grew, and we had a growing audience. And our mission is really all about hyper Bitcoinization, how we evangelize Bitcoin to the world. We saw the opportunity to add a financial component onto that, where not only could we tell people about Bitcoin, we could get people who were too scared at the time to buy their own Bitcoin to give us some money to go buy Bitcoin for them. So that was kind of the very rough concept at the start. We launched UTXO 5 years ago this month, in September of 2019. And we actually started with kind of a liquid directional fund strategy, really focused again on the Bitcoin ecosystem, but where our investor base is high net worth, kind of traditional investors, family offices who, for the most part, have had and probably still have very little exposure to Bitcoin or crypto outside of us working with them. And so we built a fund that helps people get access to Bitcoin, and on the kind of liquid directional side that's taken a lot of different directions over the past 5 years. That's looked like us investing in a lot of the publicly traded Bitcoin miners and some of the public Bitcoin products out there. At one time, we were very large investors in GBTC, basically buying Bitcoin in the public markets at a massive discount, counting on the fact that someday there'd be an ETF. And today, in the liquid fund, there's kind of like two themes that we're really dialed in on. One is kind of continuing on the financialization of Bitcoin, like the public markets aspect of that. And MicroStrategy has really been kind of the leading example of that in the US, but we're working with and are talking to a lot of other publicly traded companies around the world where, either Bitcoin's an aspect of their business, something that's operational, like mining or transaction processing, or simply people who are taking a page out of Sailor's playbook and using the public company wrapper to buy and acquire Bitcoin. And so that's where we're really focused. We seeded a company like that in Japan called MetaPlanet, where I joined the board. That's basically, if you really boil it down, it's like a long Bitcoin, short Japanese yen carry trade. That's been a lot of fun for us. And we're looking for more of those opportunities. The second theme really ties into what you guys are talking about here with Bitcoin Season 2, which is now kind of the emerging on-chain native yield opportunities for Bitcoin. So, with our fund, we have a big balance sheet of Bitcoin, and I like to think we're one of the most progressive funds out there in terms of deploying that Bitcoin on chain, whether it's into some of these DeFi apps, some of the layer 2s, some of the new Bitcoin staking primitives that have popped up, where we can earn an actual on-chain native yield on that Bitcoin kind of by deploying it across the landscape, which really ties into where we see this space going on the venture side.
So kind of, I want to not necessarily back up, but back up maybe just a little bit. So 2019 is when that liquid fund starts, and it's when y'all start playing with some of these equities. You're investing in Bitcoin for people. You're looking for opportunities to get them exposure into the market for those who don't want to deal with going through an exchange or managing their own keys. Was there an inflection point in the Bitcoin ecosystem that y'all noted before you started the VC or the venture fund? Was there like a point in time when you said, okay, now we want to take this into kind of, like you said, a more progressive stance of investing in the future of some of these on-chain platforms? Was there a moment in time in which y'all said, we got to start doing this? Or was that always part of the game plan?
Our game plan was always that there would be a lot of interesting companies built in Bitcoin, and we wanted to find a way to get some exposure there. And over that 5 years, we did some angel investing. We did a little bit of venture investing off our balance sheet into some lightning companies as LPs and other funds in the space. But that true inflection point for us was actually January of last year, when we kind of saw Ordinals hit the scene, and the liquidity they attracted, the developer mindshare they attracted, and just the influx of new founders, new talent, new ideas coming into the space. So we thankfully at Bitcoin Magazine had kind of a front row seat to watching that unfold over January, February, March. And, a couple months in, we had pretty high conviction that this isn't going away. This is only going to get crazier. And the, Ordinals really unlocked a mental shift in terms of the design space on Bitcoin and Bitcoiners' willingness to experiment with new things. And so we just saw this influx of founders, of ideas, of people trying to build things that maybe aren't new to Bitcoin, but are now much more feasible with SegWit and Taproot, and with the kind of degen willingness to try new things on Bitcoin again. So it was like, a couple of months after that, March, April or something, we said, there's so many founders, so many interesting ideas coming into the space right now that if we're ever going to launch a venture fund, we have to do it now because the time is right, and we think there's going to be some massive businesses built out of this kind of wave or this vintage of founders in Bitcoin. So we raised and launched our first venture fund middle of last year. It's coming up on just about or just over 1 year old, and for the last 12 months we've been investing pretty aggressively into all of these new ideas coming into Bitcoin, and we take a very big tent approach where our focus is on Bitcoin, but what that means and the types of businesses that we fund there range the whole spectrum from consumer stuff like wallets to developer tools that are RPCs or infrastructure APIs for people to be able to build in this ecosystem, to some of the layer twos. We've done a lot of layer two deals, the programmability execution environment for people to build stuff on Bitcoin, and now transitioning more to even the app layer where we're investing directly in DeFi apps, protocols, marketplaces, people building, end user consumer products that take advantage of all this infrastructure that's popped up over the last year.
Yeah, I was this is an interesting point because we were talking to Gigi this morning, who again, recent hire last year on the venture side. Um and the topic of the bootstrapping problem for apps or new layers came up, and he mentioned that UTXO is in an interesting position because you can be on both the venture side and the liquid fund could participate in uh, ameliorating some of the bootstrapping of the liquidity of some of these protocols. And it's an interesting kind of double pronged strategy. Um, or do you? Have you guys been doing that? What's your thoughts with that overall idea?
It's a it's a very intentional strategy, and it's one where I don't think we're big enough to create winners or necessarily move the market, but where we're very intentional about being hands-on users and also supporters of the projects and protocols we invest in. And so having that liquid bucket where we can provide TVL in Bitcoin, where we can stake it, where we can actually be users in some size of the projects we're investing in, has been very rewarding for us, both in terms of, we learn a lot from doing that, from actually trying all these things, seeing what works, seeing how difficult it is to bridge or wrap your Bitcoin into these things, to underwriting all the smart contract risk of using these new platforms. But at the same time, having that component also helps us get into a lot of deals where we can be a value add investor as projects go from idea to prototype to testnet to actually mainnet launch, to having an ecosystem of projects that we can use on their platform, in their ecosystem. So maybe Bob is a great example of this, where we participated in the seed round of Bob, the EVM L2 from our venture fund, and then as they launched their points campaign, their mainnet, their staking program, we had so much confidence in the team and the product that they'd built that we moved a sizable chunk of our liquid portfolio into the Bob network. And I think if you look at the leaderboard today, we're the top spice earner, the top TVL contributor today to the Bob ecosystem. And so having that hands-on approach means we get to work with projects longer in more ways, and also gives us very valuable feedback for what we think is working in the market, and what's the opportunity for these platforms.
Yeah. So when you started the venture arm about a year ago, it was still like summer of 2023. Ordinals were dead. The a lot of the like hopes and maybe like anticipations of like on-chain activity and Bitcoin as a platform, if you will, were still in flux. But now I would say it's not as contrarian to like have a Bitcoin season 2 venture strategy, or maybe is it? I'm kind of curious your thoughts on this. Like, I still haven't seen many like historical Bitcoin venture funds take a similar approach as you guys. This seems to me like to be a strategy more from the East, an Asian venture. Um, do you guys view yourselves as a little bit of a contrarian Bitcoin investor with this strategy? Because it seems to me like you are, but I'm curious your thoughts.
We try not to be just contrarian or just go with the flow. We try to come up with our own thesis for what the future of Bitcoin looks like. I will say, what we're seeing in the landscape today, and kind of how we operate, how we underwrite some investments, is much more similar to kind of the crypto VC model that other funds have executed on very well. And that is a little bit heretical to say in Bitcoin circles, but where we've taken a much broader approach than maybe some of the earlier kind of pure play vintage Bitcoin funds that invested in mining, infrastructure, hardware wallets, lightning payments. And we think all those are great things. We've made investments in those spaces. We've also been LPs in some of the kind of pure play Bitcoin funds that we've seen. But when you zoom out and look at kind of just the VC dollars that Bitcoin has attracted historically compared to crypto broadly, it's a tiny fraction. And we thought we could do our part to change that, and also to encourage founders who are maybe they've built something on Ethereum, they've built elsewhere in the space, but Bitcoin is always like near and dear to their heart, whether it's like their entryway into crypto or it's what they still hold most of their net worth in, and they want to do something in the space, even if it involves DeFi or even if it involves tokens or some of the more speculative aspects of the space. And we think Bitcoin is a big enough landscape for everyone to play. And so we've taken a very open-minded approach where we'll do pure equity investments into stuff that's going to take a long time to mature. And we're happy to back great founders building that space. But where there's people that are, planning to launch a proof of stake network that has its own token, we still consider that in scope, as long as they're building with Bitcoin or for Bitcoin, or Bitcoin's an integral part of their value proposition. And ultimately, they're giving more optionality to Bitcoin holders at the end of the day for making Bitcoin more useful, more functional, and ultimately more valuable. And so as long as it kind of meets those criteria, we have taken a very broad approach. And I think that's kind of what sets us apart from both the earlier vintage funds in the Bitcoin space, and also from the crypto VC funds. And when we first launched our fund, when we first started this seeing this opportunity materialize, we actually spent a lot of time kind of evangelizing this to the tier one crypto VCs, to the Polychains and Multicoins and Panteras of the world, about, hey, if your fund thesis is that there's going to be amazing financial products built with crypto, you can't ignore what's going on in Bitcoin today. And when we first started having those conversations, I'll say people were very skeptical. Not a lot of people wanted to do the homework to really understand Ordinals, to see what was happening here. But as the space has matured and the quality of the founders has matured, that's also a shift that we've seen within the industry now, where every single one of those tier one VCs has pretty much done a Bitcoin deal or two in the last year. A lot of them have gone into the Bitcoin layer twos, and where Bitcoin as an ecosystem where you can invest is now something that they're talking about, not just Ethereum, not just Solana, not just alternative L1s. And so if we even can take a little bit of credit for helping make that shift happen, that's something I'm really proud of.
I'm glad you mentioned sorry, Charlie, can I jump in here?
Yeah, go for it.
I'm glad you mentioned tokens and speculation and all of these wonderful things that seem to never get out of the lexicon of anyone who talks about these blockchain ecosystems. I kind of have a two-pronged question here, so I haven't fully formulated it, so I apologize if this kind of comes out messy, but a lot of the token ecosystems and the DeFi summer that we saw on Ethereum back in like 2019, 2020, the Solana ecosystem blowing up, a lot of that had to do with this kind of incentive where these permissionless systems just allowed anyone to build on top of them. DeFi applications launch a token, and the token incentives were really some of the biggest drivers there because it was a huge cash grab for a lot of people. A lot of that mind share is moving to Bitcoin, and a cynical part of me wants to say that the people coming into this industry are really just looking for a narrative shift, and they're trying to find a new arena to extract value from. Am I wrong in thinking that a lot of those incentives, a lot of those narratives are moving to Bitcoin in some cases because people are looking for a new area to build these ecosystems because the liquidity in Ethereum and Solana is drying up? Am I wrong to think that?
You're not totally wrong, although I think we're still pretty early where a lot of the founders, a lot of the projects that are building are still very authentic, care about Bitcoin, building with a lot of integrity. Where there's a lot of money flowing, though, it always attracts grifters and kind of the fast money. And we are starting to see that, I think, within the Bitcoin space, where particularly in the Bitcoin L2 space, where we had a couple great projects who are doing innovative technical stuff raise a ton of money and then quickly spring up 40 or 50 kind of copycats who were much more opportunistic, who hadn't been working on this for years, but saw that there was venture capital money flowing and users getting excited and wanted to move fast on it. So I don't think the signal being there that like this is a great place to build is a bad thing at all. I think there's very unethical, extractive ways to build a business or launch a token. But at the end of the day, what where I always come back to is that for at a 30,000 foot view, what Bitcoin is really good at is democratizing financial access and creating global capital markets for value ideas to flow. And I think if you look at the equity market in the U.S., we don't consider starting a company, launching an equity that's 100% pre-mined, where the founders own 100% of it, who they sell to retail investors over time. We don't consider that to be an unethical thing, as long because we have a big regulatory environment, we have disclosure requirements, we have some investor safeguards there in place. And I think if I could snap my fingers and do away with the Securities Act of 1933, which is what regulates this whole industry, I think that a much better global open access permissionless capital market could be built, and that a lot of these tokens ultimately at the end of the day should be equities or securities that anyone in the world is able to buy and invest in with appropriate some protections and some disclosure requirements. And that crypto has given some glimpses of both the good, the bad, and the ugly of what that future could look like. but that's kind of the perspective we look at it from. And I think there's some legitimate token use cases. I think there's a lot of bad token use cases, but we don't want to throw the baby out with the bathwater, and try to do our work under the hood. And where it makes sense, where the founders feel strongly about it, where it can be a valuable tool for incentive alignment, they're welcome to experiment with it. But it's not a prerequisite for us. And for people that want to go the traditional equity route, we're totally happy as well.
That's a pretty base take to say, man, we wish we could just restructure a lot of the ways that we Americans are allowed to deploy capital and invest, which actually gets into an interesting topic, I think, that of right now the like the leading capital, typically the majority of, I'd say, venture into Bitcoin season 2, the broad term. A lot of the majority of the capital seems to be coming from the East, from Asian venture. I see these big checks, and they're not, as far as I'm aware, as constrained by disclosure or certain regulatory requirements. Does this present a challenge trying to invest in this similar into the same kind of business as these other venture firms? Or are there ways that, like Westerners in a comparatively more regulated environment, are there ways that we can compete with that type of venture?
The Asian ecosystem is a super interesting one, is a wild one, and is one that I think deserves a ton of credit for kind of the initial excitement around Ordinals, the launch of BRC20s, companies like Unisat that were very, very early to this, that also attracted a lot of Eastern VC money into it. So it's one we've spent a little bit of time in, and we've got, a couple funds based out of Hong Kong or Singapore that we co-invest with often, that we do a lot of deals with, that we've gotten to know. But it's hard for me to give any sweeping generalizations about that market. And I would say the biggest thing that we just try to understand and look for is really the incentive alignment there between the projects and their founders, the investors, and then the retail end users or end investors of the project. And I think if you look at tokens as a whole, they've basically come up with a way to like speed run the entire seed to Series A to IPO process in the course of 9 or 12 months. And we've learned that's not always a good thing. So that incentive alignment is really what matters most in terms of aligning the interests of the project and the investors with creating the most value at the end of the day. And I think there's a lot of flexibility with token models for how you can do that well and how you can do that poorly. Everything that from lockups to vesting schedules to cliffs to where you're pushing it on to list on Binance, etc. It's not a landscape we're super familiar with, but we try to just understand that incentive alignment and really back projects, hopefully with co-investors that take a long-term view on the space, that aren't just in it for a quick buck or a when token, when Binance.
I heard a really good comment on our most recent podcast, where Luke from Satlayer said his dream team is a go-to-market team from the East and an engineering team from the West. I think that like really resonated, because that really, I think, zeroes in on typical strengths between these two markets. I want to go back to this reference you made about when you were starting the UTXO venture side. You were talking to the titanous crypto VCs, the Polychains, Panteras, Multicoins. And it's really interesting because since then we've seen Multicoin make their first investment. I think they led the Arch network, which I think you guys also participated in. We saw Coinbase Ventures also make their first Bitcoin investment. Coinbase has kind of put Bitcoin off to the side here for a long time, and this represents an interesting. I think I also wrote a check alongside them for SAT flow, which was
At flow,
interesting.
yep.
Yeah. Do you, and so I maybe I led with like this idea that maybe it was a bit contrarian to take these approaches to invest in these types of companies in the Bitcoin ecosystem, but we're seeing this, we're seeing the gates open a little bit on this. And just the scale of I would say Web3 crypto venture does dwarf that if we're talking about venture into the Bitcoin ecosystem versus broader crypto. Do you think maybe we have this we have this idea of the Bitcoin black hole which sucks in all the liquidity of all the money, but like maybe this is happening in the venture space too, and this is just the first couple dots crossing the event horizon. What is that, what do you think about this idea?
I'm I'm totally with you on this. I think a few of these deals have been kind of gateway drugs for some of these bigger kind of tier one crypto VCs. I think the validation in the market isn't there yet for them to go full Monty, and they're probably rightly so taking a very measured, slow approach to really understand what the market size is. And I think to be super honest, I think there's a ton resting on the Bitcoin space over the next 3 or 6 months with the kind of the planned launches of Bob, Botanics, Arch Network, a bunch of these kind of tier one deals that have attracted some incredible investors that have very big opportunities, but that they haven't realized yet. But I think if we see a couple of these come out and nail it, whether it's in terms of the usage, the traction, the TVL, the token, whatever. I think as there's more and more validation in terms of data points, I think it's just going to suck in more crypto VC dollars. And when you zoom out and really think about it, it's like if you're a generalist crypto fund, like how are you going to construct your portfolio? And sure, there's people that are just Solana funds or just whatever. But if you're a generalist fund, you need to be constructing your portfolio to match either like the developer activity by different chain or the market cap of the addressable market by every chain. And if you look at it that way, I mean, Bitcoin dominance has been ripping here. Your crypto VC portfolio should be at least 54% allocated to the Bitcoin network or something similar. So we're making the big bet that number is going to go up significantly over the next couple of years as we have more and more validation, and as some of these assumptions that we're making ourselves to get de-risked about the appetite for Bitcoin users to experiment with these new things, the ability for these projects to really capture meaningful liquidity and kind of tap into the monetary properties of Bitcoin. But those are bets that we're happy to make all day.
And these are bets that in some ways, at least the thesis behind them has been years in the making. I mean, even going back to the last cycle, you had a lot of noise around things like the Lightning Network, which is, more for payments, but it still kind of falls into this realm of technology built on top of Bitcoin that can improve its use cases. Obviously, we had Liquid, we had Rootstock, and then Sovereign coming out of the Rootstock ecosystem. You had all of these side chains and layer twos that were being talked about in terms of these future use cases for financialization on Bitcoin. And it was always presented as this way to take mind share away from the other Bitcoin adjacent cryptocurrencies, like Ethereum, later Solana, and all of these kind of DeFi and dApp chains, to take an ancient term out of the chest there. All of these things were kind of in conversation with those, saying, one day, guys, all of this stuff that you go to Ethereum for, you can eventually do on Bitcoin. And it feels, to use something that's popular in common parlance today, it feels like there's been a real vibe shift in terms of this is no longer just feels or hopium, or this is definitely going to happen one day, guys, we promise. Now it feels like these applications and networks bolted on top of Bitcoin are really being built, and there actually is excitement to see them built. And earlier in the conversation, you had mentioned ordinals and inscriptions as kind of being a catalyst or the spark that set this off. Do you see any other catalysts or any other kind of, how to put it, narratives or events that have really kind of accelerated this trend? Because it happened really quickly. And I understand how ordinals and inscriptions, in terms of bringing in fresh developer mindshare, bringing in new users, exciting kind of an entirely new generation of Bitcoin users around these use cases. Ordinals and inscriptions undoubtedly had a hand there. But is there something else going on underneath all of this that we haven't really seen or hasn't been touched on? I have a hard time believing that it's only the ordinals and inscriptions phenomenon that has kind of sparked this renaissance of Bitcoin utility.
There's a couple other factors I'd point to that kind of create like the right time, right environment for this to emerge. I think one that's a little bit slept on, but that we hear a lot from founders, is just the brutal bear market that the whole industry weathered leading up to like through 2022, 2023, kind of right pre-ordinals. And so, if you're a Bitcoiner and your stack is down significantly, that hurts. But if you were building and staked your company on building for one of these new L1s that promise to be faster, cheaper, better, well, when there's a lot of money flowing, a lot of token incentives, maybe that looks like a great play. But in a bear market, that is brutal when it turns out the foundation you're building on is just a ghost town, and that when the money stops flowing, there's no real users at the end of the day. There's only mercenaries there trying to farm the airdrops or because of the incentives. And so it's a ghost town out there. But Bitcoin, as much as the bear markets still suck, has that convicted holder base where it's the flight to safety in crypto. It's what's got the most staying power at the end of the day, and has the most sustainable liquidity, which we've seen through these kind of market cycles. So a lot of people disillusioned with where they were building, what they were working on in crypto, kind of coming back to Bitcoin through that painful FTX-led bear market. And then, another catalyst there really being like the launch of the ETFs in the US, which is something we've been talking about for a while, something we capitalized on with our liquid fund, but also kind of just cements Bitcoin's spot as the top dog, at least in the US, and even with Ethereum's launching recently here this summer, Bitcoin is head and shoulders magnitude above it. And then I think the last point that kind of catalyzed it is almost a generational shift in a microcosm, where in Bitcoin we talk a lot about how Bitcoin is really a technology for millennials, and there's a lot of boomers who just don't get it, won't get it, don't care. But as this like wealth transfer from boomers to millennials happens, a lot of that is going to be super positive for Bitcoin, because there's a new generation that grew up with the internet, that is natively digital, and a digital money just makes sense to them intuitively. I think you had a microcosm of that in the Bitcoin culture at large, where we had the block size wars, the scaling debates, the forks that gave the whole industry, and particularly developers who are trying to build stuff, whether it's core devs or people building applications, so much brain damage, so much pain, so much community infighting that it forced a lot of people out of the space. made a lot of people quit. It was such a drag on the industry. But where now that we're years out looking back at Segwit and Taproot, some of those wounds have just started to heal over time, and it's kind of, we've had like an older generation of developers, if you will, almost retire or age out, which has created the fertile soil for new voices, new ideas, kind of a new crop of thought leaders, if you will, to spring up in the Bitcoin space. And so the combination of like all those things happening at the same time really made magical conditions for innovation, and for people to start talking about like changing Bitcoin again, anti-ossification, like new ideas. Maybe we could actually have a soft fork to add functionality to Bitcoin, like Opcat. Maybe Bitcoin isn't forever stuck in its current state, and that reopening that conversation has also brought a lot of new ideas, brought some bad ones too, but has shifted the perception, I think, at least in the wider crypto community, of Bitcoin being like pet rock, digital gold, just forever doing its thing, to something that can actually be upgraded and improved over time and made more useful for more people. And I think that's really what has also attracted the attention of a lot of the kind of crypto complex, is that Bitcoin's not dead yet.
So yeah, you just described Bitcoin season 2 in a nutshell. That right there, the past 2 minutes, is pretty much the overarching thesis of this particular show. I'll just as a last topic, I'll double tap on the topic of a soft fork. While it's generally considered unwise to invest in anticipation of a soft fork, it does actually feel like something's going to happen, and it's hard to say what. Where do you think we are a year from now in a soft fork discussion? Do you have any idea what you think it might look like at this time? Again, just for reference, this is early September 2024. What do you think the next 12 months look like for Bitcoin consensus discussion, if you can predict?
I don't have a great history with these predictions, but the thing I think is the most pivotal, most influential thing in driving this discussion is ultimately fee rates at the end of the day. And so I think if we get into an environment, particularly a good bull market environment where prices are going up, there's a lot of on-chain activity, there's a lot of network activity. Maybe it's all these L2s competing for block space for their DA layers. But in any environment in which a lot of people are using Bitcoin and fees are rapidly rising, which we've seen, glimpses of with Ordinals and Runes and BRC20s, where these like fee spikes happen. I think if we get a sustained period, weeks, months, maybe even longer, of elevated fees on the Bitcoin network, I think there's going to be tremendous community pressure to do something to kind of galvanize the widespread support you need for a soft fork. Whether that's Opcat that would make a lot of this stuff more efficient, that would help bring down fees, particularly for these L2s. Maybe it's I don't think it's something as crazy as like a OpZK verify, although there's a lot of people talking about how that could be implemented now. But I think fee pressure is really what drives that at the end of the day, to get kind of that widespread consensus. And I've been very encouraged recently by kind of the progress and discussion around covenants of some form, whether it's Opcat, whether it's CTV, and we try to take an agnostic approach, where we're not core developers. We're not trying to advocate for one set of changes or the other, but we want to have an environment where the best ideas can filter up and ultimately win. And so I think there's starting to be a will in the Bitcoin community, and I think fee pressure is probably what tips the scales. If there's any chance of us getting kind of soft fork client out at some point next year.
It's funny how you mentioned the fee pressure because, covenants, specifically through something like OpCat or OpCTV, there's kind of a twofold use case. They can help scale Bitcoin by unlocking, certain scaling techniques and layer 2 applications that currently don't have the ability to service, at least not in a way that's efficient. And number two, obviously, there's the custody case of it improves, user custody. And I think that, kind of to your point, it's no accident that we are starting to have these soft fork conversations spring up once again after we had, half of crypto or Bitcoin Twitter crying about the fact that they can't make a transaction for extended periods of time. And, I say crying, and I don't want to belittle it because, people have short memories. There was, like, for almost all of Q4 last year, there you could not get in under 100 sat per VByte. For basically from
It was
like the end of
amazing.
October, through December, it was just brutal. And as I was mining at the time, and I was working, doing analysis for Bitcoin mining. For me, like, it was kind of great. I was like, okay, I'm making more money. Hash price is higher. I thought, my rigs were going to be underwater, and I have a lot to write about. But I sympathize with both sides in that argument of people being like, well, it's like not in my block space. You can't really say that. But also for the common user, it was a very frustrating time. So I'm happy to see, hopefully, at least what I've seen from that is a kind of channeling of that anger and a channeling of that energy into productive means to try to push forth something like CAT or CTV that should help us manage these problems in the future. So,
In the words of Jeremy Rubin, I think he
100%.
said it. I think Jeremy said it at Bitcoin Asia, where he said something to the tune of, fee pressure will eventually make even the most staunch ossificationists beg for soft forking into a covenant. And I thought that was really prescient, and I think that really does. I think, Tyler, you do nail it on the head there. That at the heart of most of what drives Bitcoin Season 2 is a conversation around fees and block space dynamics. So, yeah, we're covering that. I'm excited to have this conversation maybe a year from now, see where we are, see how, yeah, see.
That'd be a good check-in. What worked, what didn't,
Yeah.
biggest winners,
Yeah, that'd be
biggest
fun.
losers.
Yeah. Well, anyway, thank you so much for coming on the show, Tyler. Best of luck to you and to UTXO, the whole team, Gigi, Cassie, everybody else on the Liquid Fund side too. So thank you so much for hanging out for Bitcoin Season 2. Bitcoin Season 2 is produced by Blockspace Media. Make sure to check out our other content, The UTXO Mining Pod, Bitcoin Stock Show, and our newsletter, hit blockspace.media to subscribe to all of those. Thank you very much.